Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the key US banking stocks. We'll start by taking a look at the Spider S&P Regional Banking ETF. Then we will also cover the XLF, which is the ETF for the financial sector. Then we will take a look at the major US stock banking stocks, what their patterns, the charts are telling us, and the patterns indicate in those charts. This video is for educational purposes only and it is not a financial advice. New subscribers to the channel, thank you very much for subscribing. Returning subscribers, thank you for watching our content. So guys, what we are looking at is the daily chart of the Spider S&P Regional Banking ETF, and today is 29th of May. It is a holiday, a weekend, and I wish everyone having a nice break for the long weekend. So I'm gonna zoom in, and what we're going to take a look at is here, right here. What we are looking at is that the price had retraced all the way back to 78.6% Fibonacci retracement. It went below a little bit, but it has found support at 34.45. That's important. As long as that support is being held and the price remains above 78.6% Fibonacci retracement, it looks like the price wants to actually rally to perhaps right around 46.20 level, maybe a little bit higher, 47. And the reason is that this 46 level, let me just quickly point this one out, right, 46.25 roughly. This is the 38.2% Fibonacci retracement of this entire swing low. So let me actually just draw this like this. So it looks like the price might actually be, rallying and trying to retrace the 38.2% Fibonacci retracement. And also we have in this entire leg down the market symmetry. This is how much the market had tried to rally before falling apart, and this will be equal move. Now if the market is able to actually move above this level on a consecutive closing basis and a stronger closing for the stock, and this bearish symmetry is broken to the upside, that's pretty good news. That would also indicate in terms of the broader stock market that perhaps things are much better and much more control financially in the financial system, and that could actually spark a nice rally. But for now, we have to look at our patterns. The bearish symmetry still remains, and we will have to watch our target to the upside. But shorter term, looking at just this price action, let me actually blow it up for you guys. So here we go. So here, if you look at this, the price actually formed a higher low here, and then closed above the 20-day moving average. So this blue line you see is the 20-day moving average. So from a momentum perspective, that's a nice positive momentum, although it's short term. So it looks like we might be actually we might rally from here and try to attack this 46.25 level, roughly speaking, which is the 38.2% Fibonacci retracement. So let's quickly take a look at the XLF. So here we go. So the last time when we did the video for this segment, we were watching for a potential ABCD pattern, which could in fact take this ETF right up to the $34 to around $34.35, $34.35, and that is because of this fact that as long as the price remains above $31.23, which is point C, the stock might actually be moving in an ABCD formation higher, and it will take it to right into this resistance zone of 61.8% Fibonacci retracement, and also ABCD pattern formation coming in here. And also we have the bearish symmetry line coming in here. So the last time, before the market really began to accelerate to the downside, this is how much it had rallied, and that will also come together right here. So a really strong level of resistance possibly, and we have a number of things coming together. So we have confluence of several things telling us that this is the level that we should be watching if in fact the price is moving in an ABCD formation above. If this level, which is a pretty strong level highlighted in this yellow pattern formation, coming in right at the 78.6% Fibonacci retracement around $31 per share level. If that's broken to the downside, then this ABCD pattern that we are looking to the upside is out of the picture, and then it means that it's just gonna go and price could go much lower. We will not tackle that for now. We'll just focus on the smaller pattern. The bigger pattern ABCD could actually see price going much lower. This is 61.8% Fibonacci retracement, comes around 2680. The ABCD can actually even take it a little bit lower, but what we're watching for is that for now that there's a possibility we might have a corrective price action which looks like more of a corrective price action to the upside, taking it to $34.35. So this is what we're looking at XLF. Let's take a look at Goldman Sachs. So the Goldman Sachs here, one of the things is that the bearish symmetry is still in play. And what do we mean by the bearish symmetry? So if we look at this entire decline here, whenever it had tried to rally, this is the rally, this is the, in terms of magnitude, how much it tried to rally, found really strong resistance, boom, price fell lower, and then it had done the same thing. So the price in terms of magnitude is similar, found pretty good resistance, and here we also had a resistance line, a trend line coming from this point here as well. Now what we are also watching for is just like what we saw in XLF. We have actually found good support in this stock right at the 61.8% Fibonacci retracement, coming in at $319, roughly speaking 320. So I'm actually gonna mark this with this brown line right here, and here this down trend line, it appears to be broken. However, there's a possibility that it might get retested. We usually like to see 2 consecutive closes above, so we have to wait and watch for the price action really closely. And in fact, just like the XLF, what might actually be in play is here in Goldman Sachs, that the price might actually be also attempting an ABCD formation right like this, which will take it right into the 61.8% Fibonacci retracement right here, and ABCD is a little bit above, so right into the zone of 61.8% Fibonacci retracement and 78.6% retracement. Let me highlight it like this, so that could be a potential resistance zone. So I'm just gonna type, let me make it really small, easy to see, a little bit bigger. Zone to watch. Okay. The good thing will be that if the price actually is able to do that, although it will remain sort of a corrective structure in the sense that it's still in this possible CD leg lower, it would have broken the bearish symmetry in this leg. So which means that we'll have to watch how the price action will be when it gets there, because there's a possibility that once the bearish symmetry is broken, in fact we could have a different kind of a pattern now being played because of the support being held, which could mean that we could be actually in fact looking at an A, B, C, D to the upside, and that could also be possible, and that would be really good for the overall stock market as well. But for now, the key point is really key point is, let me actually write it down like this, so so that is clear and easy to see what we did here. So A, B, and this is our point C. Now the point C is really important, and here we go, that's our D. I'll put a question mark, I don't know whether it'll get there or not. As long as this point C is held, which is around $319 per share level, possibly we are moving in this ABCD pattern to the upside, and it will break the bearish symmetry, and we'll have to wait and see that, you know, how it's gonna, the price action will unfold when it gets there. So the point C, the 61.8% Fibonacci retracement, is key support. So actually, let me also write key support. Oops. There we go. Okay, so that's Goldman Sachs. Let's take a look at JP Morgan. So the JP Morgan stock is actually trading sideways in a range. It's been doing that for a while. The stock had actually tried to rally, found the resistance from 61.8% Fibonacci retracement. After that, it's just gone pretty much nowhere. It did come and test this 38.2% Fibonacci retracement. It's just going sideways. There's a possibility that if there is going to be a rally in the XLF, as we were looking at, then, you know, maybe it's going to go and test the upper boundary of this range. We'll have to wait and see. Let's take a look at Citigroup. So Citigroup has been one of these stocks in this banking group that we take a look at, which has been one of the weakest ones. And here you can see that after this pattern formation formed, which we actually looked at live on this channel, it's just, you know, been broken down to the downside, and it's just forming some sort of a double bottom here. And if there's going to be a rally in the overall sector, then of course this stock is also going to benefit. But by looking at this pattern formation here, this is a potential double bottom, so sure, it can rally a little bit, but look, we have this downward trend line sloping. In fact, you can draw it in a band from here and also here. If there is going to be a rally, just looking at this line segment, possibly this 47, 48 region is going to be a pretty a resistance level to watch. Anywhere between 48 to about $49 is going to be possible resistance. Let's take a look at what's the next stock. We should look at Morgan Stanley. Here we go. So Morgan Stanley was one of the stocks in the banking group we take a look at, for which the price action was much better because it had held this trend line. However, it broke below it. Now the price is just kissing this 20-day moving average. So just looking at this banking group for now, the Goldman Sachs, look at the Goldman Sachs in terms of its support structure in the price action seems to be one of the good ones. And here again, it looks like it's just gonna meander here. It's finding resistance now, which was potentially supported one time. Maybe it's going to act like resistance now. So we are just waiting on what it's going to do. We do have, in fact, if the price begins to break to the downside, in fact, there is a gap coming around $64 per share, around the coming in from the 21st of December gap, and that's also going to be a 1-to-1 ABCD formation to the downside. Let's take a look at the Bank of America. Here we go. So this is the Bank of America daily chart, and here, something not that great to look at. The reason is that when the stock did in fact try to rally after from the 13th of October, when the overall market bottomed, stock market in the United States, it found a good amount of resistance coming in from 38.2% Fibonacci retracement. Normally, when a resistance come in at from 38.2% Fibonacci retracement, whether it's a resistance or a support level, it's usually a continuation of the trend, and that's why what we have seen is actually all the attempts for the rally to fail and the stock moving lower. Here we have a key level of 78.6% Fibonacci retracement coming around $25 per share level. Maybe this is where the Bank of America might actually trade down to, and we could have some support coming in from this channel line here as well. So this is what we are looking at in the Bank of America. From a very short-term perspective, the price is just really kissing this 20-day period moving average. That's something short-term traders take a look at. So maybe if there is going to be a rally in the XLF, it's going to benefit a little bit, but looks like it's really going for $25 per share level, which is 78.6% Fibonacci retracement. Let's take a look at Wells Fargo, the last one that we'll take a look at. The video is getting really long. So this one, there is a strong bearish symmetry in place. There's a possibility that, because this 78.6% Fibonacci retracement was held, pretty much like Goldman Sachs, where 61.8% retracement was held, we might actually be in this ABCD pattern formation, highlighted in purple, and the stock might be targeting $43.50. So the one highlighted here, 43.51, and that's going to be an ABCD pattern formation. Also the bearish symmetry. So we have a number of things coming together, and that's why we have written, let me actually make it in bold. There we go. 14 will be maybe even 16. There we go. So possibly that's going to be a pretty strong resistance level should the price reach there. Shorter term momentum perspective, the momentum is positive because the price is above the 20-day period moving average. So that's what we are looking at in terms of the key US banking stocks, and also the ETFs such as the XLF, and also the regional banking index KRE. Guys, if you like how we look at the markets, how we do our technical analysis, please do subscribe to the channel. And if you found this video of educational value, then please do like the video. I would like to just before closing the video point out that I will be traveling this week, and due to the travel I might not be able to post videos at all or in time, because I will be traveling in a different time zone. Because of this schedule, I do apologize in advance for my absence or the lack of videos that might come through, but if there's going to be something really urgent, then I will try to post a video, and whenever I can get a chance, depending upon the internet availability as well, I will do the analysis and bring videos out for you guys. But because of the travel, there might be a period of time there will be possibly lack of videos coming out from my part. Do apologize for that. Thank you very much for watching the video. Good luck and good trading.